Hey everyone, and welcome back to the channel. Today we're going to be talking about a creative way some buyers are beating today's high mortgage rates and why that 3% rate that you keep hearing about isn't totally dead. So stick around because this strategy could save you hundreds, if not thousands per month if you know how to find it. So here's the deal. While most new mortgage rates are floating around the 6 to 7% these days, some buyers are jumping into homes at the old 2 to 3% rates by using assumable mortgages. Yep, you can assume the seller's loan, basically take it over and keep their lower rate. So what does assumable mean exactly? Well, it means that if the seller has a loan that qualifies, you, the buyer, can take over the existing mortgage, including their lower interest rate. And not all loans qualify, but FHA, VA, and USDA loans usually do if certain conditions are met. Right now, fewer than 1 in 6 mortgages in the US are even eligible to be assumed, but that's still millions of loans, and it's catching on. We've seen a 127% increase in FHA loans being assumed over the last 2 years alone. In 2021, just over 2,500 FHA loans were assumed. In 2023, the numbers jumped up to 4,000. In 2024, it's almost up to 6,000. Early data in 2025 could be even higher, but this isn't hypothetical. It's happening. So why bother? Well, the savings, well, it can be huge. Imagine you're buying a home with a seller who has a locked-in 3% rate from back in 2021. If you assume their loan, your monthly payment, well, it could be substantially less than if you started fresh at today's rates around 7%. Now, this could easily save you hundreds, if not thousands of dollars per month. We're talking about real money here, not pocket change. Nothing's ever that simple. Now, first, most conventional loans, well, they aren't assumable. Second, the buyer and the seller both have to agree. And third, you have to bring some serious cash to the table. So here's why. Let's say the seller owes $200,000 on a home that's worth $300,000. You still have to pay the difference. So you'll need to pay $100,000 up front to make up for that gap or find a way to finance it. Now, some buyers get a second loan. This is called a blended rate to cover that gap. The resulting overall rate might land around 5%, still cheaper than the 7% that you would get on a whole new mortgage. Now, another problem, most people just don't know that this option exists. Now, real estate agents, buyers, and even some sellers may have no idea that their loan can even be assumed. And even if they do, well, that process can be complicated. You've got to get the buyer, the seller, the 2 agents, the lender, the title company, escrow. Everybody has to play ball in order for this to work. And that's why we're now seeing new apps pop up to help buyers and sellers actually find homes with assumable loans. Platforms like Rome and AssumeList focus specifically on listing homes that qualify for loan assumptions, and they guide buyers through the paperwork to help or basically keep the process on track. Now, on top of that, some of the big real estate sites like Realtor.com now have a assumable mortgage filter so you can search for homes that might have a loan worth taking over. Now, of course, you'll always want to confirm the details with an agent or a lender, but this is a handy starting point. So while the idea of assumable mortgage certainly isn't new, these tools and filters are making it easier than ever for buyers and sellers to actually pull it off, which is the big reason numbers are climbing. So if you are a seller, this could be a huge advantage. Homes with assumable loans tend to attract more buyers because they're more affordable. Now, Rome says that agents who list with an assumable loan often sell faster and even get higher prices. Now, one study found that sellers net about 5% more on the sale price. So if you're selling and have a FHA or VA loan, don't hide the best part. Lead with it. Advertise with that low rate. Bottom line, if you're buying, it pays to know if a house has an assumable loan. And if you're selling, well, it pays to tell the world if your loan can be taken over. In a market where everyone's worried about high rates, this little strategy could make a big difference for buyers and sellers. Well, friends, that's all I got here for you. If you found this useful, hit that like button and subscribe for more straightforward real estate breakdowns. And drop a comment if you want me to do a deep dive on how to assume a mortgage step by step. And if you're in California and looking to buy or sell, I'm a local real estate agent. So reach out anytime and let's make a plan that works best for you. That said, friends, I'm going to be shutting off the cameras and I will see you in the next video.